Let me just run through some of the changes from the last PPP to this current version that people need to be aware of. Like I mentioned before, 503c6s, which are lobbying entities, are now eligible to apply. There are some limitations on that in terms of expenses, actually expenses incurred as a result of direct lobbying. But payroll and payroll expenses, of course, that's eligible now. So we've expanded the eligibility to include that not-for-profit sector. As I mentioned before, any business in the past that had more than 500 employees would not be eligible. And that's reduced down to 300. So it's fewer small businesses that are going to be, but a vast majority of the businesses in St. Bernard Parish do not have 300 employees. And that's not a knock on the parish. It's true across the state. You'd be surprised. Like a manufacturing facility, as a matter of fact, to be considered small, you can have 1,499 employees. That's big,
Right.
But in accordance with the NAICS code standard, that's considered small. So, but yeah, for 300 or fewer employees, and that's a change. You have to show a decline in revenue, and again, it can be any quarter in 2019 to 2020. So, you could January, February, March of 2020, and 2019, compare it to that month in 2020. So I don't think it's going to be that much of a problem for people, but we'll see. If it is, then I suspect that they'll take a look at making that modification.
Right.
Internal review. Now, if your loan is less than $100,000, you can submit it as an internal review for this revenue. So for small loan amounts, you're not going to be required to go out and get an independent audit on this. So
what can you expound on that? What does internal review mean?
Well, it would be an internal review. Would be something that you hand to your accountant, and then your accountant goes through it, and then they certify the numbers. So it would be whatever it is that you would, as a normal course of business for you rather than going through a full-blown audit, which is very expensive.
Right.
It could be independent audit. You can do an independent audit. I think Quickbooks has a widget that allows you to do an internal.
So yes, in QuickBooks, you can pull internal financials, which you could give to your bank instead of paying a CPA to do either audited or compiled financials, correct?
That's correct, yeah. So that's a question that we got a lot.
Gotcha.
Now, I mentioned it before, and let me reiterate. You had to have used all of your money on your first draw to be eligible for a second draw. Now, I don't expect that's going to be a problem, but I have here and there, I've heard independent instances where somebody had a problem with that. But really, when you look at the first draw, it was for an 8 week period of payroll expenses and eligible expenses, and then you had 20 weeks to spend it. I don't. So basically, you could have. You should have used it all up in 8 weeks, but then we gave you 20 weeks. So,
but if you weren't open, some businesses weren't allowed to open, and some businesses were allowed to reopen, and then they had to close again. And especially in New Orleans, where we went to phase 2, and then we went back down to phase 1. I know that that was a problem for some of the businesses in New Orleans.
Now, there were some provisions under PPP, the first one, where if you had, because of local regulatory requirements, you could not spend all that money. That was part of your forgiveness request that you submitted. So that would have already been taken into consideration. We're talking, so basically what would have happened is your authorized PPP loan amount was reduced based on that. So the fact that you didn't spend it all wasn't that much of a problem. It's only those people that did not have those mitigating circumstances still
Okay.
didn't spend the money. I haven't seen anything. Well, that's not true. I mean, there were a couple of people that said, "Yeah, I got the PPP loan money, and I just decided not to bring anybody back on payroll, and I just said never mind and sent the money back to the bank." Well, you got a loan, you didn't use it, so you're not going to be eligible unless they change the rules. So that's something that you have to consider. The other change now, if you're anything other than a hospitality related business, it's the same. It's basically your annual expenses, divided by 2.5, and that will get, or the 2.5 8-week period, right? So you have an 8-week period. If you're a hotel or a restaurant, it goes up to, instead of 2.5, it goes to 3.5. So you get more money for the second loan application.
Right.
So that's a change as well. Eligibility, payroll expense, same. However, it does allow you to use as a payroll expense other benefits. In the past, it was like life insurance. Some companies offer life insurance as part of a benefit package. In the first round of PPP, you could not include that. Now you can. So,
Okay.
So they've expanded some of the payroll expenses now that you might not have been able to, get forgiveness on last time, but you can this time. There are some changes to rental expenses, and I got to be careful about this because, to be honest, I'm not really sure exactly how our policy is on this, but we have had situations where a company owner,
Mm-hmm.
it has a company, a real estate or real property company, and he's actually paying rent to himself.
Right.
That was allowed under PPP. We didn't care, that was happening. Now we do. So you're going to be limited if you're renting to yourself. Those rental expenses might not be eligible for PPP loan forgiveness. So
we're going to have to clarify that one because that is my situation. I actually rent to myself, and I did include those rental expenses on the first round of forgiveness.
Yeah, you're going to be, and now I've got motivation to look into it even more. Because I don't know how we're doing that. To be honest with you, I looked at the policy and I wasn't really clear on exactly how that was going to happen. But it seems like there's a percentage or a part that you can expense out, and it depends on a lot of different factors. So you and I have to get together and figure this out. But no, you're not going to be allowed to, as a general rule, what you did last time on your rental expenses to yourself. That's going to be something that's changed. Now, other changes. I'm going to categorize them in different ways. So I'm just going to use the terms I like to use, but
okay.
And then I'll try and explain it. Covered operations expenses. These are costs related to COVID. So covered operations expenses, and I think that's how it's described in the law and the policy, is allowed. And I talked about it a little bit before, where if you had to incur additional expenses to meet local COVID restriction requirements, such as PPE, plexiglass screens, things like that you needed to do. Those are now eligible expenses for this loan program going forward. And it is retroactive. So even if it was an expense that you had in the previous PPP loan that you did not get forgiveness for, you can bring those over onto this loan as well. So that's,
and those are 100% forgivable?
Well, yeah, I mean, it depends. But again, 60% of the loan has to be for payroll and payroll expenses. So this is just another expense. You may end up saying, I don't want to claim it because I've got enough other expenses that I can claim.
Right.
But yeah, if you're a business and you don't have a whole lot of expenses that are eligible that you can apply, and you spend all this money on COVID, yeah, you can expense that. You can put that in your PPP loan, and then you can have your loan paid off, forgiven. So that's a very positive thing. It also covers supplier costs. One of the problems that in the first PPP loan that we had, and this might impact your business, additional costs as resulting to supplier. Now, it's mostly going to affect restaurants, where restaurants have they have to go out and they have to buy food, they have to buy. There's a cost of acquisition because the life of the product is limited. So when you buy food, you can't just say, well, I'm going to put it in the warehouse and hold it until I need it. After a period of time, it's no longer any good. That incurs additional costs as well. The storage and cost of actually maintaining a perishable raw material or supplied good has a cost. Well, now you can claim that. So that's another expense that you can add. And also, I really don't know. There may be some businesses out there that were impacted by this, but the new policy allows you to claim any damage that could have been incurred as a result of rioting, or
Okay.
so if your property was damaged because of COVID related anger,
Right. Civil unrest.
Civil unrest. I'll give you one example. I just like 2 days ago, somebody asked me this, and I had to look it up, and I found out. Apparently, he was a store owner, and he had to be closed because of COVID restrictions. And this wasn't in New Orleans; it was another part of the state. And there was a sign that was posted that was published by the city, saying that due to COVID restrictions, this business is closed. And somebody objected to that and threw a brick through the window right where the sign was. So I asked, could that be part of this? And I looked it up and said, yeah, it could, So if it's damage related to COVID or something related to COVID, then absolutely, you can claim that as well. I think this is probably going to have a bigger impact on businesses in Portland. But yeah, it doesn't mean that we haven't had that problem here, but so that's something else that you can consider as well. And again, that's retroactive. It's just like the COVID acquisition stuff. I mentioned this before. I'll mention it again. The second draw has to be submitted to the same lender. Now, I've done so many of these things, Mindy. I'm so sorry. I might have already mentioned this or not. I don't know if I covered this in our.
Yes, we covered the same lender. We did.
Right.
We covered the fact that hopefully in further amendments or future amendments, they would rescind that because not all of the big banks are taking second round applications.
Right. Your coverage period is either going to be 8 weeks or 24 weeks. So if you're gonna get a loan based on an 8-week amount, and then you have 24 weeks. That's been changed. It was 20. At first it was 8, and then they quickly realized that was impossible. And then we amended it to 20, and now it's been changed yet again to 24. So you have 24 weeks to spend 8 weeks worth of expenses. So it shouldn't be a problem, but that is a change.
8
another
weeks
change.
Of payroll, correct? 8 weeks of payroll.
8 weeks of payroll and eligible expenses. So yes. Okay. Now forgiveness is now tax deductible. Now this was something that was a change from the previous iteration. So I know a lot of people are still working on their taxes from the last year. So we got this change just in time for you to file your taxes. But that was a question that they got. If these are expenses, and normally they're eligible for a tax deduction, but because it's like free money, forgiven this, can you still expense it? And we didn't know. We didn't answer. Well, now we got clarification. Yes, it's tax deductible. So that's good. I don't know if Mike covered that on his call, but last time I talked to him, that was one of the things he was agonizing over because he didn't know.
It's a huge deal. Yeah, it's a big deal for businesses.
Yeah, I talked about this before, but I don't think I've actually mentioned the number. It's loans over $150,000 have to be there has to be a demonstration of lost revenue. So this is only going to apply to those borrowers that are borrowing more than $150,000. And like I said, that may change, but right now that's the way it is right now.
I have a question about that. Mm-hmm. Is the lost revenue part of that? Are you required to certify that lost revenue was due to COVID?
No, I don't know how you could. No, you just.
I've been asked that question on a second round application.
Yeah, no. If the lender is asking this question, of course, the lenders have a broad authority on this program. All I can tell you is what the SBA tells the lenders. Now, the lenders can add additional requirements, and I think that's what causes a lot of the confusion with our borrowers. Is they'll call me up and say, "Hey, my lender wants this and that, and they want W-2s from all the employees. Why are you asking for this?" We're not asking for that. That's not an SBA requirement. The lender can. The lender actually has an obligation to make sure that the money is being used in the way it's supposed to. And if the only way they're comfortable is if you have to provide that information to them, they're free to do it. That's just the way it is. So, your lender may say you have to demonstrate that it's COVID related. Mm-hmm. I have heard one lender doing that. Somebody asked me about it, and I said, well, as far as the law and the policy is concerned, we haven't made that stipulation, but just a letter, a memorandum for record from the borrower saying it's COVID related, seems to me would be enough. But again, defer to the lender. If the lender's telling you to do something, go ahead and do it. Right. And then negotiate what that looks like.
Well, awesome. Well, Mike, you've been really extremely helpful. Thank you so much for taking the time to sit with us today. And if anyone has any suggestions on what should be changed in the future amendments, I'm just going to go ahead and give them your personal phone number. Is that okay?
Give my address too, so they can come to my house. No, actually, my email address is the best way to reach me. It's michael.ricks@sba.gov. That's michael.ricks@sba.gov. Go to our website, sba.com. Look for local resources, and you'll find Louisiana. You can call us up. My entire staff directory is posted online. So if you want to reach me, that's my contact information. If you want to reach Joe, who's like I don't think anybody knows our certified programs on contracting better than Joe. All our BOS is Val Brumfield, is our lead lender relations specialist. She works directly with the banks, and a lot of times they will call her and ask her questions like the one we just had this. Do we need to demonstrate that the loss in revenue is COVID related? Right. And what do I need to do? And then Val just kind of clarifies that. No, I don't know where you got this, or yes, you do. But yeah, that's how to reach us. That's the best way.
Yes, everybody at the New Orleans District SBA office is super helpful, and they're more than willing to drop everything that they're doing to answer the phone and help us out as business owners. So we appreciate that. Thank you so
great.
much.
Oh, no, it's no problem.
Thank you for joining this first episode of the second season of the Pulse of the Parish podcast. The audio recording is available on all major podcasting platforms. Links are available below. For more of our video recordings, the most recent upload is available here. or a video YouTube thinks you'll like is available here. We'll see you next time.